Suppose you have a debt, and then one day that debt is relieved. Now you're extremely happy, but do you have a tax ramification? The answer is, it depends. I'll take you through a 4-step process where we analyze the transaction for taxability. And then we'll take a close look at the compliance requirements so we properly disclose the transaction to the Internal Revenue Service. Step 1 of our 4-step process to determine the taxability of debt relief is first determine the amount of the debt relief. So to do that, that's best done with an example. So let's suppose we have 2 taxpayers. We say Mr. Nice and Mr. Glad. And Mr. Nice loans Mr. Glad $10,000. Several years pass, and Mr. Glad is able to pay back $7,000 in cash, and let's suppose he also pays with $3,000 of property. Well, here we have given $10,000 of value back from our original $10,000 loan. Therefore, we don't have any debt relief. Let's change it slightly and suppose that we didn't give back the $3,000 of property and we only gave the $7,000 of cash back. Here we clearly have income under Code Section 61, which says that gross income includes, from all sources derived, include but not limited to, a whole list of items. And that 12th item is discharge of indebtedness. So our $3,000 is going to be income under Code Section 61A12. So in our example, we have a $3,000 discharge of indebtedness. Mr. Nice would have to report that $3,000 to the IRS. How does he do that? Through a Form 1099-C. So he discloses here his name as the creditor and the lender, and that the debtor, Mr. Glad, received a $3,000 of discharge of indebtedness income. So even though Mr. Glad does have $3,000 of income per Code Section 61, and even though the IRS received this Form 1099-C from Mr. Nice, we might not have to include it in the income if we can find a code section to exclude it. Which brings us to step 2. After you determine the debt relief, see if you can exclude the amount under Section 102. And Section 102 states that you can exclude it as long as it's a gift. Courts have defined gifts as coming from a detached and disinterested generosity, either coming out of affection, respect, admiration, or charitable impulses. So in other words, as long as there is no business relationship between Mr. Nice and Mr. Glad, we can argue that the $3,000 of debt relief was merely a gift. So in our example, if Mr. Glad had debt relief of $3,000 and he had a business relationship with Mr. Nice, and therefore he was not able to exclude it under 102, then we go to step 3, and that would be to see if we can exclude it under Code Section 108. And there are a lot of exclusions under 108. I don't have a time in this presentation to go over all of them, but I'm going to go over some of the most common. And then another common exclusion under 108 is 108A1B, and that's the insolvency exception. If the debtor, in our example, Mr. Glad, is insolvent, he can exclude the amount to the extent he is insolvent. And what do we mean by insolvent? We mean his liabilities, the fair market value of his liabilities, immediately before the discharge exceeds his assets. After the first 3 steps, our 4th step is simply to report the transaction. So where does Mr. Glad report the $3,000 of debt relief income? It would go on his Form 1040, assuming he wasn't able to exclude it under 102 or 108. And it goes on line 21. Now, assuming Mr. Glad qualified for one of the exclusions under Code Section 108, he wouldn't report anything on Form 1040 and instead disclose his exclusion in Form 982. Let's demonstrate 108B and how we reduce our tax attributes with an example. Let's go back to our friend Mr. Glad, who had excluded $3,000 of income because of insolvency. Well, the story isn't over. He has to reduce his tax attributes. Now let's assume that he had NOL carry forward of $2,100, and let's suppose he also had a $300 general business credit. And he didn't have minimum tax credits, capital loss carry forwards, but he did have plenty of basis that he could reduce, let's say $10,000. So which of these attributes would get reduced and by how much? Well, we have to go in order, says 108B. So the first thing to go is his NOL. And we reduce the NOL dollar for dollar. So the NOL goes from $2,100 down to 0. But we still have $900 more to reduce. Now, we move down to general business credits. Now, because the general business credit is an after-tax attribute, the code says we reduce 33 1/3 cents for each dollar. So we have $900 left. This will reduce our general business credit down to 0, and we don't have to reduce any more tax credits. One thing to keep in mind is we do have an election under 108B5 where we can effectively move to reduce our basis reduction first. So it moves basis reduction to the front of the line. So in our example, where we had $3,000 of tax attributes that we had to reduce, if we make a 108B5 election, we would not touch our NOL, we would not touch our general business credit, and we would reduce our basis reduction from $10,000 down to $7,000. Okay, let's revisit our example with Mr. Nice and Mr. Glad. Mr. Nice loaned Mr. Glad $10,000. Let's suppose several years later, in full satisfaction of that $10,000 loan, Mr. Glad gave $7,000 back to Mr. Nice. So clearly, as we stated before, we have $3,000 of discharge of indebtedness. But let's add some facts. Let's suppose immediately before that discharge and receipt of that $7,000, Mr. Glad had the following assets: fair market value of $140,000. And let's suppose that he had liabilities of $150,000. So he is insolvent by $10,000. Further assume that, and this is the fair market value, further assume that he had basis in his assets of $148,000. So here we have a taxpayer who had a $3,000 discharge of indebtedness, which we are not going to include in the income because of 108A1B, the insolvency exception, because he's insolvent by $10,000, so that $3,000 is going to be excluded from income. But there's a cost. We have to reduce our tax attributes. Assume that we had an NOL of $1,000. So the first thing that we would have to do is reduce our NOL from $1,000 down to 0. Now, we don't have any general business credit, minimum tax credit, or capital loss carry forwards. So our next thing that we would have to reduce is our basis. Now, it appears that our basis would be reduced, our $148,000 basis would be reduced by $2,000. But that's not necessarily the case. What we're going to have to do is analyze the situation by taking a look at a 1017B to see if that basis reduction of $2,000 is limited. Code section 1017B limits our basis reduction to our aggregate basis after the discharge over the aggregate liabilities after the discharge. Well, how would that work for our example? Well, let's take it just step by step. Well, what was the aggregate assets right before the discharge? Well, that's $148,000. So we'll take $148,000, and what happened as a part of the discharge to our assets? Well, we actually paid $7,000 in full satisfaction of the loan. So our assets dropped by $7,000. And what was our liabilities before? Well, our liabilities before was $150,000. And what happened as a part of the discharge? Well, as a part of the discharge, we lost all of our $10,000 liability here. $7,000 went away because we paid it off, and $3,000 went away because it was discharged. So 1017B says our aggregate basis after the discharge, which would be $141,000, over our aggregate liabilities, which is here 150 over 10, which is 140. So we are limited by exactly $1,000. So we don't have to reduce our basis here by $2,000. Instead, we only have to reduce it by $1,000. It's interesting to note that if you make a 108B election, then 108B5 election, then 1017 is not applicable. So remember, 108B5 says we go straight to the reduce of our basis, which is, in this problem, we reduce our basis by the amount we excluded, $3,000. And we would not get to utilize 1017B, which limits our basis reduction. So our answer would simply be, don't touch the NOL, but our basis would be reduced by $3,000. Let's take a look at the compliance requirements that Mr. Glad has in this example. Now remember, Mr. Glad will receive a Form 1099-C from the lender showing $3,000, but he doesn't have to panic. He will simply not include the amount in the income at all, but he does need to disclose on the Form 982 that he is excluding the amount due to the discharge of indebtedness, which is 1B, and he would actually disclose the $3,000. He would have to show that his reduction in tax attributes in Part 2 would be both on Part 6, which is the $1,000 of NOL carry forward being reduced, as well as line 10A showing the $1,000 of basis reduction. Now, what if we did make a 108B5 election? If that's the case, we would not have touched our NOL. But remember, as I said, our basis reduction would be the full $3,000 because Code Section 1017B would be not applicable. In summary, there are 4 steps to determine the taxability of discharge of indebtedness. First, determine the amount of the discharge of indebtedness. Keep in mind this is the amount which the lender is required to disclose on Form 1099-C. Next, see if you can exclude it under Code Section 102 as a gift, meaning that you can make an argument that the discharge had no business reason. In step 3, see if you can exclude it under Section 108 and the many provisions we discussed. And then finally, you report the transaction, meaning that if you cannot exclude it, that you would include it in the income, or show the exclusion in Form 982 and disclose the resulting tax attributes.